Hi everyone, I'm Ken from Crypto Trading KS and the CTKS method. In this video, we're going to look through global news, market impacts, and the institutional pulse. We're going to look at the key news headlines from the Wall Street Journal. And Sam Altman is getting in trouble with WorldCoin. Is the US economy headed for a soft landing or something harder? We'll find out from Reuters. And will markets rally as we go into Jackson Hole? Let's run the numbers and find out. And of course, crypto news is coming too. Sam Altman wants to scan the eyeballs of every person on Earth and create the biggest financial and identity network imaginable. Not surprising, other countries are not too happy about this. WorldCoin has been raided in Hong Kong, blocked in Spain, fined in Argentina, and criminally investigated in Kenya. And the EU looks to do a ruling to see if WorldCoin can continue there. The concept of WorldCoin was pretty noble. Sam wanted to tell humans and robots apart by scanning people's eyeballs, and then distributing a form of universal basic income, or UBI, to people. If you're investing in WorldCoin, this kind of news would not endear the public, so please be aware. In other news, when we look at the federal funds rate increasing, inflation increasing, and yields increasing, that's not good news for the payment down of debt. And by July 2025, debt dynamics suggest interest payments to rise, U.S. Treasury interest payments to become $1.4 trillion by July 2025. Or is it $1.2 trillion? It really depends on rate cuts. And you can see the more that the Fed cuts the federal funds rate, the less it has to pay in terms of interest payments. San Francisco Federal Reserve Bank President Mary Daly says it's time to consider adjusting borrowing costs, in other words, lowering down the federal funds rate. Mary says going gradually is not problematic and the labor market, while slowing, is not weak. Federal Chair Jerome Powell is scheduled to deliver his economic outlooks on Friday at Jackson Hole. What Jerome says will move the stock market and also move the crypto market, so please be aware. What we're looking at Friday here, Jackson Hole Symposium, and on Saturday, Australia time, Federal Chair Powell will take center stage and do his thing. But what is he expected to say? One thing that we've seen, traders are definitely unwinding the bet that they're going to do big rate cuts in the next FOMC meeting. Chair Jerome Powell is speaking at Jackson Hole, and the anticipation is that Jerome will basically say that progress on inflation has been sufficient to allow the commencement of rate cuts. For the year, the S&P 500 is up more than 16% and within 2% from its July all-time closing high. More than $3 trillion has been added to the S&P since the August low, and the expectation is that the S&P 500 and the major indices will keep on coming up. Next Friday US time or Saturday Aussie time will be a time that moves the markets. And this time around, investors are hopeful that the Fed has achieved its goal, and we will see not a dump, but the opposite, a dramatic liftoff in the indices. The next FOMC meeting in the next 30 days will decide what's happening. And if we look at the probability of the federal funds rate, which is currently 525 to 550, that range, a 25 basis point, the probability is 72.5%. But please note, this was 75% on the last trading session. So it's actually come down. And this probability of a 50 basis point decrease in the federal funds rate has actually come up. You can see it was 25% and now it's gone to 27.5%. Remember, if this one goes up, we're expecting trouble on the economic horizon. If this one goes up, we're expecting a rally in the major indices. Just keep your eyes on these. Out there, we have to also consider there is negative news floating around. When we look at yield curve, we can see that it's coming down and starting to go up. It's uninverting. When we have uninversion, it usually just points to a recession. But don't forget, we're talking about soft landing versus hard landing. And sometimes, by the time things turn around, the recession is already over. Also, we're in an election year, and the presidential cycle weekly data since 1900 from Fidelity just assumes that we would get a bit of a pullback at this stage and rally into the end of the year. Next year could be a little bit choppy. Next year and all years are traders' years, but next year especially is likely to be a trader's year. Therefore, if you don't know how to trade, you're actually leaving a lot of money off the table. Let's have a look at the actual impacts of what's been going on. And thank you so much to everybody who watches and comments on the videos. It's just awesome. We had a lot of new people reach out and say hi. A very warm welcome to you all. You'll find that we have one of the best communities on YouTube. Looking through the crypto market, we can see Bitcoin just slightly below 60,000. It's 59,422. Ethereum in percentage terms has done much better than Bitcoin, and Solana not doing too badly as well. Bitcoin is only up slightly, just 0.13% at the current time. Ethereum a little bit better. BNB is down. Solana up. USDC and USDT are stable coins. If you're investing in them, hoping for a really good return, I would suggest you rethink your strategy. They're not going anywhere. And Dogecoin is just currently down 1.28%, and TON nearly up 10%. Looking towards the greatest gainers in the past 24 hours, top 100, we can see TON is taking out pole position, followed by NOT, 1000 Sats, Conflux, Gala, The Graph, DYDX, Sandbox, and BitTensor. The greatest losers at the current time are not really that great. When we look at the past 24 hours, we can see Mantra is down 3.47%, followed by Uni, Leo, Litecoin, Rune, Stellar, Doge, Helium, and Stacks. In the latest crypto news, Colorado Church Group tokenizes a $2.5 million chapel. The Colorado House of Prayer has heard the Lord say, "Tokenize thy building." Why rent when thy can own? And they've created a crypto called Stone Coin in order to purchase the old stone church. Pretty cool. In other news, Coinbase, KuCoin, and others file for crypto license applications in Turkey. This news is a little bit old, but it escaped past sessions, so I just wanted to put it in for you. Dubai Court recognizes crypto as a valid salary payment. How cool, you can get paid in crypto. Sign me up. If you've been looking at crypto Twitter /CryptoX, you know that there are a lot of particular charts just floating around saying the Bitcoin bull run is just about to get started. For the bull run to get started, we need to see the taking out of structural resistance levels. It's time to get into the institutional pulse. There are always positive and negative news stories, and the retail pulse tends to filter one or the other out. People are generally all bullish or all bearish. On YouTube, there are specific channels dedicated to 24/7 negativity on financial markets, and they have been so all the time. And you can find the absolute opposite. But what we do here is that we cover both sides of everything. We're balanced. We understand that global news is just reactive. It just follows what's happened in the past 24 hours or potentially what could be coming up. Market impacts give us the actual impact of what is happening. Often you'll see that retail is told one specific story and the actual impact is exactly the opposite case. Therefore, what we need to do is to get the institutional pulse on the market. The fact that you're here and watching this just says that you want to invest your time in gaining a balanced perspective on the market. I very much appreciate you being here. And thank you, Brett, for your very kind comment, my friend. Just before we get into the institutional levels, I just want to share something with you. Yardeni is a really good research area, and I suggest you check it out. What Yardeni is basically saying here, S&P operating earnings per share and the forecasts into the 24, 25, and 26 year. There's a very solid thing that you need to understand about the stock market. If the stock market is coming up, it's because earnings are improving. If the stock market is coming down, it's because earnings are decreasing. What we're seeing here is upward price momentum or upwards earnings momentum in terms of forecasts. So please bear this in mind. The outlook for the markets is positive. We know that no alt can escape Bitcoin's gravity, and Bitcoin cannot escape the stock market's gravity. So looking at the S&P 500 futures, the Nasdaq, the Russell 2000, and the Dow futures is a really good idea, because if those futures are coming up, there's a gravitational pull for Bitcoin and your favorite altcoins to go up as well. Please let me know in the comments, what do you think the futures are going to do in the next 24 hours? Do you think they're going to come up, or do you think they're going to retrace? The way that we look at price action is that we just need to know where the structural support levels are and the structural resistance levels are. If we understand where structural support is and how strong it is, we can tell if the market is breaking down or breaking upwards. This fractal I put in quite a long time ago, and the concept is if we start to get a cut under and we start to lose support, you need to be aware and prepared to take advantage of fantastic bargains that will be coming through the crypto market. And if we break upwards and get a cut over here and start to rally, you need to be prepared for that as well. That's why we do three-dimensional risk management. No alt can escape Bitcoin's gravity, so when Bitcoin is coming up, the alts are coming up. When Bitcoin is going down, the alts are coming down with it as well. So when we get concerted effort of positive price momentum from Bitcoin, we can see the entire crypto market will overshoot Bitcoin's positive price action. And it also does it to the negative dimension as well. That's why you have to be very aware of what Bitcoin is doing. For example, you can see it pretty much in real time right now. If Bitcoin is coming down, the vast majority of cryptos will be following. They'll just be saying, hey, Bitcoin, where are you going? I want to hang out with you. All the alts are like best friends to Bitcoin. Or should I say, Bitcoin is the best friend to the alts. If Bitcoin is feeling a little bit, sad or lonely, and he's getting a little bit dark and he's going down, he's going to pull all the alts with him. Naughty Bitcoin. That's why we say no alt can escape Bitcoin's gravity. And here we're looking at about 100 alts altogether. This behavior will play out through the different groups, and inside the masterclass we talk about groups a lot because they're really important to understand. For example, the Ethereum ecosystem, real-world assets. We want to see the top performers and the bottom performers. Typically, the top performers will retrace and the bottom performers will retrace also. When we're looking at gaming, NOT has done really well. BNX as well. Solana ecosystem, high is there, pond is splashing around. In terms of the service, we can see Solana is out in front, followed by Ethereum and XRP. ADA is coming in 4th position. AI and big data, Rose is out in front, followed by the Graph, followed by Teo. What about memes? 1000 Sats is doing its thing. Bohm and Floki are next. Pepe, and Doge are last. Distributed computing and file storage. Look at CIS. It went absolutely crazy. This particular price action is a short liquidation spike, which is often followed by a long liquidation. So you have to be very careful about getting sucked in when things are going parabolic. Just something to be aware of. So far, we're just getting a bit of an interpretation on what the market is doing. Looking at wallets, LRC up the top, safe not feeling so safe down the bottom. DeFi, we can see DeFi just following Bitcoin's gravitational alignment. DePIN, Flux has been going nuts. Centralized exchanges, Wazirax is doing pretty well. Oh, look at Dodo on the dexes. Dodo is going bananas. What about Bitcoin ecosystem? Riff is out of front, in front, followed by Lever. And we can see in the layer 2s, LRC on the top and Blast on the bottom. In the last video we did together, we looked at these A, B, C, and D areas. And what did Bitcoin do after that price action from the last video? We saw that it came up and it was trying to get up to A, but then didn't do so well. And we could say it pretty much stopped around the B area. Now we're seeing some negative momentum inside the crypto market. What we need to understand are where are the structural support levels and structural resistance levels. That's what's absolutely vital to know. How do we see those? We just pop on the indicator. It's just really easy. Every single chart just simply moves from structural support to structural support, or from a structural resistance level up to another structural resistance level. If it can't bypass structural resistance, you can see this big reversal here. But this 59,600 has been pretty significant across the weekend. Typically you get low trading volume across the weekend, which means the price can go up and it can go down quite significantly. But we didn't see that across the weekend. In fact, it was pretty boring. Right now, we're passing through a negative fresh air gap. That's why we're getting a big push down at the current time. But around 58,600 is the next level of structural support. And there's a better one just below that at 57,820. When we get down to about the 57,370 mark, there's also a level of structural support there. If we think that price is going to do something like this, just come down, actually wobble around here, underside retest, and get caught at these structural levels, that's the bearish case. But it doesn't necessarily mean that's going to happen. We could get something like this. That is why you need to know where the structural resistance levels are and the structural support levels are. Please pop in the comments, do you think we're coming back to B in the next 24 hours? And of course we always look to the right. These structural resistance levels are rightwards looking. These structural support levels are rightwards looking as well. Or do you think we're going to end up around C or below? Or do you think we're going to come up to A or above? Please let me know in the comments. This is just a really good thing to do. It gets your synchronization factor up, and that's pretty important. All charts are intercorrelated and interdependent. In the last video, we were here in terms of total crypto market cap, which is basically the market capitalization of every single crypto project. What did we see here? Some pretty good behavior by the alts, and then it reversed and has come down. And of course, this was weekend trading. But where is the structure? Could we have foreseen that we would have trouble up here? Well, let's pop on the indicator and find out. You'll find when you understand the structural levels, it's an absolute game changer. This is starting to make a lot more sense. Just below that $2.08 trillion mark, there were several areas of structural overhead resistance. And this analysis, done through Level 1 and Level 2 standard certification, covers more than 3,700 days. What have we seen here? When we sold down, we made a series of highs, but they were all lower. This is a high, well, that's a high, that's a high, that's a lower high. That's also a high, but that high is lower than that high. So we're getting a print of higher lows in here at the current time. We had some buying activity because we had the buyers come in at that structural support, but they couldn't manage to get it over this previous high, and they've actually sliced down through this structural support and this structural support just at the current time. These are magnetized lines, so we could get a bit of a wobble. And if we have more negative price action coming down to around that $2.009 trillion mark, and that just coincides to this area, is something that you want to keep your eyes on. If total crypto market cap is falling, Bitcoin is also falling. So if you're projecting in terms of the A, B, and C on Bitcoin, if you're projecting C, you would be expecting the total crypto market cap will fall through this negative fresh air gap and do an underside retest around that $2.009 trillion mark. If you've got the A mark in your mind, you will see that it's going to come up through the structural resistance levels and challenge this $2.8 trillion area. You really want to just read Bitcoin and total crypto market cap together before applying it to your alts. Structural levels are indeed everything. We have such an incredibly talented global family, and Beardy put this one together, traditional indicators versus CTKS structural levels. Wow, thank you, Beardy. Let's put a bit of analysis together. When we're looking at Ethereum, we had in the last video, Ethereum was trading here. And just remember what was happening with Bitcoin and total crypto market cap. We had that explosion upwards in total crypto market cap, hitting resistance and then forming higher lows all the way down. And now what have we noticed here on ETH? This is why you need to read Bitcoin and total together on those structural levels. They'll give you an incredible insight into your crypto. So let's have a look at the structure on Ethereum. Okay, let's pop on the indicator. Now, what do we see here? Around that 2670 mark, there were quite a few levels of structural overhead resistance that couldn't be passed through. We didn't have a retest. This particular one was a failure, and then it failed up the top here. And that was, of course, in reliance on what total crypto market cap and Bitcoin were doing at the current time. So please bear in mind, what's happening to your favorite alt is reflected in what's happening with Bitcoin and total crypto market cap. So you need 3 charts to look at one chart, minimum. You can also see that just below that 2588 level is a good area of structural support, but there's a negative fresh air gap in here, so that means we could overshoot an underside retest before finding stronger structural support levels around that 2524 mark. That's the bearish case. The bullish case is that we get above 2680 and start to get above 2700. You need a 3-dimensional strategy when it comes to crypto. Crypto is it's exponential. It changes all the time. It's explosive and it's implosive. It's like no other market in the world. That's why you need a lot of signals for confirmation. A lot of members of the community just love Solana. So what were the Solana levels doing? You can see a very similar play out to Ethereum and total crypto market cap. But here we're seeing a bit more strength inside Solana. So therefore, we need to understand the structural levels. Now, how do we do that? One way of doing that is to just use a rectangle tool before we pop on the indicator. So you can see the structural levels very clearly. At that 146.59, we had 1, 2, 3, 4, 5, blah, 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 blah. We had so many rejections there. And what is the next structural level? 141.75. And then there's a lower one. We don't have quite a negative fresh air gap on Solana at the current time. We have more structural support in here, so Solana should get hit less if we have negative price action. So this is just something to bear in mind. And you can also see the lower structural levels. If we have a bullish case, we want to get above that 147 mark. If we have a bearish case, anything below 141 opens up bearish potential. Sometimes putting on this rectangle can be quite useful because you can see how structural support and structural resistance are always working, and the role of positive fresh air gaps. Look at that. That positive fresh air gap was filled quite nicely. Inside our community, we know that those particular lines called CTKS structure, they definitely determine price waves. And when you use Bitcoin and total crypto market cap to look at other projects such as Solana or Ethereum or anything else you want to look at. Inside the crypto market, they're very powerful. But if you want the CTKS structure on all of these charts, it's available from ctksmethod.org. I suggest you grab it. It's a really powerful thing to have. And what we know, these are actually Borsog lines, buy on red, sell on green lines. You'll see that it's a very powerful strategy. And Borsog, the eagle, buy on red, sell on green. Borsog is always looking to the right. Normal indicators look to the left. We don't want to look left, we want to look right. Joe D has very kindly offered a CTKS partial masterclass scholarship. If you would like to be an awardee, please reach out to me directly on X, or you can email me at ctksmethod@gmail.com. If you're new to the community, a very warm welcome, and you might like to just reach out and say hi in the comments. We'd love to welcome you. And if you've made it this far, perhaps put a comment on X-ray vision inside the comments. So that way I'll know that you made it all the way here, and you are awesome. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.